Hello and welcome. The main focus for markets over the past week has been inflation on both sides of the Atlantic and UK GDP. For the second month in a row, US inflation came in higher than markets expected. Core inflation, which looks at prices excluding the impact of food and energy, came in at 3.9% year-on-year in January, against expectations of 3.7%. While the difference might appear marginal, core inflation is critical for the Federal Reserve, which sets US interest rates. In an interview at the start of February, the chairman of the Federal Reserve, Jerome Powell, gave insight that the central bank is wary of cutting rates too early, highlighting the need for inflation to be on a sustainable path to 2%. Powell's comments and the stronger inflation data to start 2024 has shifted market expectations for when the first interest rate cut will take place. The market had this priced in for March, but now thinks the Fed will cut in June. For the Bank of England, core inflation is also in focus, as the pass-through effects of wage growth have kept prices elevated. Core inflation in the UK ran at 5.1% year-on-year in January, and like the US, expectations are for the first rate cut will need to be pushed out, this time from March to August. Given that inflation is lingering and the expectations on interest rate cuts have been pushed back, what has been the impact on markets and our portfolios? The S&P 500 has shrugged this off, as US economic data and fourth quarter earnings from the big technology-related companies have remained strong. We remain overweight US equities since last summer and continue to be so. The UK market has had a sluggish start to 2024, partly due to the lack of tech companies within the FTSE 100 index. The UK economy hasn't been as strong as other developed markets either. The UK economy actually entered a recession towards the end of last year as a result of 2 consecutive quarters of negative growth. Growth was largely anticipated to be low, and being marginally negative shouldn't be seen as major news. The underlying data showed that exports of services was the biggest factor causing the recession. Domestic growth, while slowing, wasn't the main culprit. We have been and remain underweight the FTSE 250 index, which is more domestic facing than the FTSE 100, and is particularly sensitive to the direction of interest rates at the moment. Looking forward, as my colleague Bowler mentioned in last month's view, we see the risk of inflation running above 2% for both the US and UK given recent events. Thanks for watching.